Hello everyone, Clifford Bennett, Chief Economist, ACY Securities. Well, following on from my report yesterday about a great property bubble bursting in the United States and probably the peak in global property markets as a whole, as the sentiment from the Chinese and the US markets will now increasingly pervade in other locations as well. And we all know the Australian market's been falling for 6 months now in terms of prices. But in the US last night, more data confirmation of my point, with existing home sales in the USA hitting a 10-year low. A 10-year low. It doesn't look good as well. And while we're speaking of not looking good, we would be remiss if we did not mention Prime Minister Liz Truss resigning over in the UK from that position of Prime Minister. Really, the UK is starting to look a little bit like Australia or Italy, with high Prime Minister turnovers, up in that league now, would you believe? So, not good. But I think not only did the Prime Minister not be up to the job, she didn't even seem to know what the job was. And I don't say that harshly, I don't think. I think most people would agree, because it's not just that the policy decisions taken were rather severe and abstract and sudden without a strong argument from her leadership, but it was also the follow-up appearances in the media and in the Parliament itself, where the Prime Minister really failed to show her ability, which we hope she has. And so now she's been forced to resign. There's even talk that Boris Johnson might make a comeback. It's because anyone who wins the leadership now of the party is probably going to lose the role anyway at the next election in coming months. So it's a kind of a poison chalice situation, but I guess one can always be optimistic if taking the role on of somehow surprising. But there's not a lot of people who want to put up their hand, and if they are, they know it's a very tough journey ahead. Boris Johnson, of course, would probably see this as perhaps he may not even run for the leadership, but perhaps an opportunity to redeem himself even. The problem with Boris Johnson getting back in, though, would be, again, a very harsh, a very harsh stiffening of the already a tough situation regarding Russia and Ukraine. So there could be some problems involved with that on a geopolitical nature. But I think the key point about the really lack of leadership vision in the UK at the moment is that their problems are so complex. It's such a severe web matrix-like situation of economic decay that no one can figure out a policy to move forward with, let alone have a policy debate from both sides of Parliament. They're kind of all trying to run the old textbook approach, but there's been a historical shift that's taken place, and that is that the UK, like the US, is an incredibly mature capitalist democracy, and as such has had 100 years or more of making rules for the sake of making rules. And what you end up with is over-regulation, over-taxation, and because of maturity of the economic system, profit margins have been totally squeezed now. So that's difficult enough, and that's the historical backdrop that no one likes to talk about. But that is the case for the UK and the USA. I like to call them the old first world, and I like to call China, Asia, the new first world, South America, the new first world, and Africa is still really in emerging markets, but I wouldn't use that term to most countries elsewhere in the world. Australia and Canada have a foot in the old first world and the new first world. They have old first world systems and increasing problems of complexity of compliance, regulation, taxation, and squeezed profit margins, but they also have a foot in the new first world of strong resource demand into Asia and elsewhere around the world. Now, in the UK as well as that long-term historical setting, they have the situation where they're going to be paying still high prices for food, and that food security is not an absolute sure thing at the moment. There may be further disruption to food supply for the whole world as a whole. Energy, same story. So food and energy prices to remain elevated. Natural gas prices. I'm fearful that natural gas prices in some parts of the world could even double where they are now. Such will be this winter. I mean, everyone must be hoping for a little bit of global warming in Europe this year so that they don't have quite the energy demands for heating and the crisis that will bring, which will most certainly include brownouts or even blackouts for parts of Europe. But in the UK, the situation could even be more severe than elsewhere. So on top of, by the way, UK consumer confidence is at all-time record lows. UK is officially depressed, suffering depression. I mean, all-time record lows in UK consumer confidence. We're talking even lower than previous recessions, even lower than during the sovereign debt crisis, even lower than Brexit, and even lower than during COVID lockdowns, would you believe? We're talking almost no confidence at all in the UK for the UK economy. So that's an environment which is encouraging people to go out and spend or grow their businesses. It's an environment that's encouraging Britons to look elsewhere possibly for their future. So the UK is in a lot of trouble. And why I've gone on about this is that, as well as property prices having peaked in the world, and I think that will certainly be the case for the UK as well, I really see sterling as potentially having a big down move here. I mean, I've previously forecast sterling to go to 105, then parity. We've seen 105, a bit lower, but I do think sterling could make another attempt at parity here. We saw stability on the day, but I'm not sure how long that momentary, let's not do anything, let's not trade because we're not sure who the new leader will be or what the policies will be. We'll just take our hands off for the moment. But I think there'll be a growing sense in the currency market that things are only going to get worse for the UK. I'm sorry. And therefore, sterling's had a big rally. It might be an opportunity to sell it again. You can see on the charts for sterling that there is the opportunity that it could be making some kind of long-term head and shoulders bottom if there's right side consolidation after that spike, after that rebound from that spike. Some consolidation here. If that can break to the upside, it's a nice technical sort of, meandering argument, but I think the fundamentals remain very ugly. And when you're talking about sterling against a currency which has almost very similar problems, in fact, from a strategic point of view, from a macroeconomic point of view, similar but not the same, not quite the energy problems the UK has, not quite the proximity to the war in Europe the UK has, but it does have some other correlations. But the problem is the US dollar is still seen as the safe haven currency in the world, whether that be a correct argument or not. And as such, as US funds continue, companies, big US global brands, continue to bring their global revenue home rather than leaving it offshore, and around the world, investors are putting their money into the US, and they are buying some treasuries, they are buying some equities, but that's being overwhelmed by the US industry having to deal with the tremendous redemption rate they currently have from investors out of funds, and therefore the funds have to sell. So that is overwhelming that foreign investment buying at the moment. But the US dollar itself is heavily bought and will continue to be. So we're talking about two opposite sides of the Atlantic, where the economics, there's some parallels, but the currencies have very different stories to tell. And when you put them together, I think it says parity for the pound to the US dollar. And I think it could say 0.97, 0.96, 0.95, but there is a risk sterling is going all the way to just 92 US cents. So, and given the sorts of moves sterling's made over the last year or so, that's not that far away. but it's something that isn't really in the psyche of the market, which means the market is vulnerable to a movement in that direction. So that's something to look out for. Otherwise, on the day, I think equities are again tinkering here on the edge of yet another precipice. I myself would be selling more. All right, thank you very much. I hope this helps. Do have a great day. Clifford Bennett, Chief Economist, ACY Securities.